Courage here from Trading with Tan, and in this video I will share with you a few secrets that improved my results in boom and crash, and I will show you a simple technique that you can use to almost win all your trades in trading boom and crash. So most traders lose money in boom and crash because of one reason only, and that reason is you are being deceived by tick candles and lot sizes. So here's what happens when you are trading boom and crash. Each and every one of these tick candles is worth 50 cents per standard lot, which means this candle is worth 50 cents. This candle is worth 50 cents. And this candle is worth 50 cents all the way to this candle here. These are 50 cents, 50 cents, 50 cents that you are making per standard lot, right? Oh, if you think about it, if you trade this with the minimum lot size, which is 0.20, each of these two tick candles is gonna be making a very few amount of money, right? So let's try it right now. Let's just place a trade here, and we are going to use the minimum lot size, which is 0.20, and we are going to buy. So if I buy this, you're going to see that each and every one of these tick candles is going to be giving me a very small amount of money. If you go to our trade, you're going to see that this is making a very few additions right here. You're going to see that this is making a very few additions. As you can see, it doesn't even make much sense to be trading here. You can see I almost got this trade, this candle, but still I'm on 3 cents profit, right? So what happens to most people here is when this happens, they will now start thinking about, okay, let me just place big lot sizes, because if I place a small lot size, you can see I'm only making like 7 cents per each movement right here. You can see each candle is gonna be giving me a very small amount. So most people will start thinking about, let me just increase this and let me just try to make as much money as possible in a short period of time. So if I get like 2 of these small candles and I place big lot sizes, I can make a lot of money. And to be honest with you, that is a very big mistake, and let me tell you why. If you look at this, these small tick candles was giving me a very small amount of money, but look at what happened when this candle came in. This tick candle came in and eat up the space that will be covered by maybe 5 or 10 of these small tick candles, right? So when you try to make big money from these tick candles and you increase your lot size, you are risking now maybe 5 times or more if this big spike comes, right? You need to understand that these small tick candles here can be very tempting to just trade, but the truth is when these big spikes come, they will eat up all your profits and maybe even 5 times that, right? So if you understand this, the next step is to figure out how to trade this market profitably, right? The good thing about boom and crash is, like other markets, boom and crash have one of the cleanest price action, and it's so easy to understand, right? Let's take a look at some examples. If you look at this chart right here, if you look at these charts on the screen, you're going to see that when I'm trading currencies, the charts are not as clean as when you're trading boom and crash. When you're trading boom and crash, your charts are very clean, your price action is very, very clean, right? Now here's the technique that I use to profit in boom and crash. Firstly, I go to the higher time frame, like the 4-hour or the 1-hour time frame. When we get to this higher time frame, the first thing that I'm gonna do is to know the trend, right? If you look at this, you can see that the trend is going up, right? If I mark here from this point to this point, you can see the market have been going up, right? So if I want to trade this market, the next thing that I want to look for is to mark out my areas of value, right? So to mark out my areas of value, what I do is just go to the objects here, check out my rectangle tool, and I mark out the zones where the market have reacted to before, right? So this is the biggest one here, and then there is also this one right here where the market came from, and also there's also this one right here, and these are the zones where the market have reacted to before. So whatever we are going to do next is going to depend on these zones, and also knowing that this market is in an uptrend. But remember, this is in a bigger time frame. We are not going to place our trade on a 4-hour time frame. Now the next step is the hardest step of any trading, right? Which is waiting for your setups, waiting for your markets to come down to these zones right here, or these zones right here, or these zones right here before placing the trade. Waiting is very hard for almost every trader, and I can tell you guys, you can have the best strategy that wins 90% of the time or more, but if you cannot wait for your setups to play off, then you are always going to lose money. Now I'm waiting, and if the market reaches any of these areas, I'm going to be starting to look for my entry triggers, right? I'm going to start look for trades, looking for when to trade, right? So what I do basically is, once the market reaches to any of these zones, I just go down to the lower time frame, like the 15-minute time frame. When I go to the lower time frame, like the 15-minute time frame, you're going to see that these zones will become very big and very easy to see, right? And once I see that these zones are very big and easy to see, I'm just waiting for the market to reach any of these zones right here. So now all I'm waiting for is the market to come down to this point. And when it reaches this area of value, what I'm waiting for is here. If the market bounces here, I'm waiting for the market to bounce from this zone and go back all the way to this upper zone right there. So I will just wait for the market to come down, and when it reaches this area of value, right? Remember, I go to the lower time frame, and the reason for that is that I want to make bigger risk to reward ratio. So if the market goes all the way to this zone, I'm just waiting for anything like candlestick patterns or trend line breaks or chart patterns like double bottoms, and then I'm going to be buying, let's say at this point right here, buy, and then I'm going to be putting my stop loss below this zone, and then expect the market to move all the way up to this point right here. But the important thing is knowing that this is an uptrend, right? Since this is an uptrend, we want to be buying. How do we know that this is an uptrend? We go to the higher time frame, like the 4-hour or the 1-hour time frame, and we can see that this market have been moving to the upside from this point to this point right there. So if I go back to the 15-minute time frame, I'm only waiting for the market to come back into this zone before starting to buy, and waiting for the market to go to the upside direction, right? The other technique is, when the market comes down to this zone, this area of value, I'm also looking into the MACD to see if I can get any kind of divergence, right? If you want to learn more about divergence, if you want a full tutorial on divergence, how it works, watch out the video appearing on the screen right now. It's gonna give you the step-by-step guide of how you can use divergence. And also, once you understand that, you can combine that divergence with this technique that I showed you in this video, and you can get maximum high probability trades.